Hey guys, I consider myself to love my country. I love the food, I love the people, but there's a few things that I don't really like. And one of it being the stock market, Bursa Malaysia. In the past, I did put money into investing in the local stock market. Well, maybe I don't do it properly, but the fact is that Bursa Malaysia isn't really a good place for most people to park their money and invest. And I'm just gonna show you some of the reasons why that's the case. Companies listed on Bursa Malaysia, they tend to be smaller compared to their peers in say Singapore or even the US. They are smaller in terms of revenue, in terms of profit, in terms of market capitalization or market cap in short, and in terms of global reach. And their performance aren't really that well. Let's look at a few examples to illustrate what I'm talking about. To begin, I'm just going to show the number one largest company on Bursa Malaysia, which is Maybank. Compare Maybank to the number one largest company in Singapore, DBS Bank. And let's put another side, the largest company in the US, Apple. But putting in Apple seems a little bit unfair because Maybank and DBS are both banks, while Apple is a consumer hardware / tech company. So let's push Apple away, and you know what? Let's put in the largest bank in the US, JP Morgan Chase. Because all three companies operate in a different country with different currencies, I'm just gonna convert these numbers into US dollar for comparison purposes. As of the date of recording, Maybank's market cap is at 24.5 billion US dollars. DBS Bank market cap was at 64 billion US dollars. And JP Morgan was close to 418 billion US dollars. That's like over 10 times larger in terms of market cap. Last 12 months revenue for Maybank is at 5.4 billion US dollars. And if you think this is big, look at DBS. DBS was at 14.2 billion US dollars. JP Morgan 143.8 billion US dollars. How about net profit in the last 12 months? Maybank 1.8 billion US dollars. DBS 7.2 billion US dollars. JP Morgan 46 billion US dollars. You may be thinking, alright, they have a larger market cap, their revenue is bigger, their net profit is bigger, but what about per share basis? Because they may have a lot of shares, right? Alright, let's look at EPS, earnings per share. Earnings per share, Maybank, last 12 months, 0.17 US dollars. DBS Bank, 2.81 US dollars. JP Morgan, 15.6 US dollars per share. So that is a very big leap as well in terms of EPS. Then you also may be wondering, okay, you're just looking at revenue, profit, all these figures. How about in terms of stock performance? Let's look at the charts to see how they performed. Opening the charts using TradingView, let's go back to say 10 years ago. Starting from September 2013 to, as of the date of recording, somewhere in September 2023. So assuming you have bought all three stocks 10 years ago and you did nothing after that, if you have bought Maybank, you have lost 8.6% over the last 10 years. But if you have put your money in, say, DBS, you have gained 105%. That's like double your money. If you put it in JP Morgan, your performance will have up 173%. That's almost 2 times of your money. But if you put in Maybank, you lose your money, alright? But of course, these numbers ignore dividends. But as I said last time in one of my videos, dividends usually can't cover capital gains or losses. Even if you put dividend yield into the performance numbers, they wouldn't change that much in terms of ranking. Right? JP Morgan will still be the best, second by DBS and Maybank, not the best. Alright, let's be fair a little bit. You may be saying, okay, Malaysian is not known for banking industry compared to Singapore or even the US. So let's look at what we do best. Think of a few names that have a global presence, a big global presence, you know, like the Googles and the Microsofts of Bursa. So if you try to think of those names, I can think of two names, and they both kind of go in line with rubber. So we have number one on the list, Top Glove. Top Glove is the largest glove manufacturer in the world. And secondly, also relating to rubber, we have Karex, the largest condom producer in the world. Funny when I say it, right? The largest condom manufacturer in the world. You may be thinking, alright, big names, you know, they are like the Googles and the Microsofts of Bursa Malaysia, they will be doing well, right? Not really. Let's have a look at their charts and some of our financials to know a little bit better on this. Opening up the chart of Top Glove in the past 10 years. Now, Top Glove is a relatively interesting stock because when COVID struck, it actually went up by over 1,000%, and it went to be the largest company on Bursa Malaysia for a short while back in August to October 2020. But I don't really like Top Glove in terms of stock performance was because it's kind of like a meme stock, right? It's like a GameStop or an AMC. It went up during COVID, and we know why, because we think that the world will need more gloves. So people were confident about the stock and pushed the price up so high that it's unsustainable. And guess what happened after that? The stock price have dropped over 90% since then. So if you have bought here, you have lost 90% of your money. But if you have bought back in say 2019 and you have sold it during COVID, your money will have 5 times. But if you look at say the past 10 years of performance, back in 2014 it was around 50 cents, and as of date recording is around 80 cents. So if you just hold it and did nothing, you have earned around 50% for the past 10 years. Alright, not too good, not too bad either, but it means that you have gained over 1000% and you have lost everything. So it's unsustainable. That's on a chart perspective. Let's look at the financials of the company for the past 10 years to see how it has performed. Opening up more financials in the TradingView, let's look at total revenue in the past 10 years, or rather what's available here. So if you see from the chart, or if you just see from the table, revenue was growing every single year, and it spiked, doubled during COVID, but it dropped a lot after COVID because we were wrong about post-COVID life. People don't really need as much gloves as we think, and you know, oversupply of gloves already. How about income? Profits grew a little bit, dropped a little bit, choppy up and down, boosted a lot during COVID, and it lost everything after that. And in the past 3 quarters, Top Glove has been incurring losses. Alright, so it turned super profitable during COVID to now a loser post-COVID. So it's not a sustainable company. And if you look at cash flow was also unsustainable. It was positive, then negative, then it grew significantly during COVID, and now it turned back negative. So it's not a really good company in terms of fundamentals just by looking at the financials. Even though it is the #1 glove producer in the world, it doesn't have a very strong economic moat because competition is tough. There are too many glove players out there in the market. Just looking at Bursa alone, we have Harta Lega, we have Kosan, we have Supermax, we have Comfort Gloves, and the list goes on. So that's on Top Glove, #1 gloves producer in the world, not doing well. How about Karex, the #1 condom maker in the world? Now, Karex was IPO'd back in end 2013, so it's just been listed for 10 years. If you can see by the chart, its IPO was around 90 over cents to a ringgit, and now it's at 57 cents. So if you had bought Karex during its IPO, you will have lost 40% of your money if you just buy, hold, and do nothing. And that is despite you making a gain of almost double until 2016. Like the first 3 years after its IPO, it gained almost double and it lost everything. So similarly to Top Glove as well, it's unsustainable. And this is not because of COVID, but generally it's unsustainable. So that's on the chart performance. How about the financials? Now, Karex's financials are very weird, I would say. If you look at its revenue has been growing over the years, quite stably. But it's not stable in terms of its income, aka net profit. If you look at here, it started with 27 million, then dropped, then dropped, then dropped, and now it's negative. So revenue is growing, but net profit is declining. That doesn't make sense. And if you look at its cash flow, its free cash flow has always been negative except for 1 to 2 years. Even though it's the largest condom manufacturer in the world, it's unable to protect itself from getting. Compare our local big players against our US peers. In the US, there's a lot of companies where we are already using the product on a daily basis. Look at our computers, look at our phones, look at what we are eating, look at what we are buying. Most of these, they are listed in the US. So I've put down a few companies on the chart. They are pretty familiar names that you would have heard of. And they all are doing very well in the past 10 years from 2013 to today, the date of recording. So if we look at Apple, the largest company in the US, it was up 854% in the last 10 years. That is like 9 times your money. Microsoft was up 844%, 9 times your money as well. If you look at Google, Google was up almost 400%. Not too good, but compare that with Top Glove and Karex. Alright, you may be saying, alright, these are the tech. Let's look at non-tech. The bottom here are non-tech, they are consumer defensive. McDonald's, we are familiar. McDonald's was up 189% over the past 10 years. Yum Brands, who own KFC and Pizza Hut, was up 160% over the past 10 years. PepsiCo was up 109%. Procter & Gamble was up 89%. Coca-Cola, the worst performer, was up 47%. If you look at their respective financials, they are all good performers. Alright, their revenue was growing, their profit was growing, their cash flow was growing, and they are doing better over the years, even though COVID strike, even though there were the US-China trade war, even though there was the war on Ukraine where stock prices were falling but they rebounded very fast. So US stocks are a lot better. Alright, after looking at all these examples, some of you may be saying, hey, how can you be like this? As a Malaysian, you need to support your local stock market. How can you put your money in the US and just leave it there and just screw Bursa? Alright, but I would say that it is our job as retail investors to make sure our money doesn't deteriorate over time. It's not our job to grow the local stock market. That's up to the respective businesses, that's up to the institutional investors. Even if we invest in the company, let's say you only buy one lot, aka 100 shares, what can you do about it? You are just a minority shareholder. You can't change the company just by being a minority shareholder. And another thing is that it's better to have our money growing over time, and if we choose to divest this money, then we can remit all this money back to the country, and that will help grow the economy as well. Rather than putting in the stock market and you lose your money over 10 years. Why would you make an investment that's losing money? In that case, it's better to put your money in a fixed deposit instead that grows at least 2% to 4 to 5%. But of course, this video isn't an investment advice, it's just sharing my thoughts with you in case you're wondering, should I invest in the local market first? And at first I have this impression as well, is that, I need to be good at investing in local market first before I move out into other countries. But over 3 to 5 years in Bursa Malaysia has taught me was that is just crap. You can't be good in a market, then only move to another market. Because ultimately, your skill isn't important. The market is important. You need to put your money in the right place. If you put it in the wrong place, no matter how good you are, you will never grow your money. With all this being said, I can say I still love my country, just that I'm not proud of my local stock market, as I always say. But there will always be some stocks that you still can invest in the local market, but I do not have a view on that because I've already stopped investing in Bursa many years back, and I'm now primarily focused on the US, Singapore and Hong Kong markets. I hope that this video has been an interesting insight for you, and with that I wish you good luck in your investing, and I hope that you are making the best returns for yourself.